Hi, I hope people can hear me out there. This is my first time doing this, so if you could let me know, I would appreciate that. Okay, can anyone hear me? Can you drop a note in the chat box? Can anyone hear me? Hi, hey, there you go, Kurt. All right. This is my first time doing this, so I'm a bit nervous. Thanks for dropping that note in there. Is the audio okay? Okay. All right, good. Good. There's a delay, so it gets me a bit nervous. Okay, cool. All right, welcome everybody. I really appreciate everybody joining. I'm excited. This is a really big leap for me. I was going to have my son here, but he's away at college to help me out with the technology. But this is going to be one volatile week. What I plan to do right now is just spend a few minutes talking about the economic data that is set to be released. The futures market should be open now. Yep. And we're going to let things settle down here for a moment, and then we will come back to the futures market. Uh, we're looking at crude oil right now. We're up over 13%, 62.17 the barrel. This is on light sweet crude. And you could bet that the big banks over at Goldman Sachs, JP Morgan, they had their traders in-house all weekend long, and they have market buy orders going off right now. And that's what we're seeing. So we're going to come back to this chart in a moment and other charts as well. And forgive me for not looking at the monitor. I'm looking at my other bigger screen here, or the camera. I'm looking at the bigger screen here. And we'll first go over the economic data that is coming out this week. It's going to be chock full of uh, volatility this week. We saw volatility come in last week. I expect it to skyrocket tomorrow morning. We do have the Empire State Manufacturing Index coming out tomorrow. No big deal unless we have a big miss or a big beat. Industrial production, capacity utilization, no big deal. Building permits, interesting, forward-looking indicator. Uh, Then, of course, we have Jay Powell. There is nobody that is more happier right now about the attacks over in Saudi Arabia than Jay Powell, because now he has the green light to do whatever he needs to do. Remember, he's been a reluctant warrior in terms of cutting rates. So now he's got the green light. Do what you need to do. Cut half a percentage point, go for it. And I think that there's a possibility that he may go that route. I'm not making that prediction, but I think there's a strong possibility that he may take this opportunity to just say, you know what, half point cut, and then we'll see what happens. But I think that the markets, in all probability, are going to skyrocket in the coming weeks. Now, we had the attacks over in Saudi Arabia. Headlines out there saying $100 barrels of oil. I don't know about that. Maybe, maybe not. It depends upon how long these facilities are shut down for and how long um, the uh, delay in getting crude to market takes. And we also have concerns about ratcheting up of tensions between Iran and the US. So a lot of headline risk out there this coming week. And the administration took immediate action, pointing the finger at Iran. Expect more uh, 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 premium to be priced into the price of oil moving forward because of instances like this. The market has been way too complacent about pricing in something like this happening. And I think that that is going to change for the longer term. And oil traders that are long anyway are happy as heck right now. So let's take a look. And while I go into the pre-market activity or the futures action, uh, if you have a couple of symbols that you want me to review later on, I'll definitely review them for you. So just pop them into the chat box. Hey, Tom, good to see you on. Irving, Dan, and Kirk, good. Hi, guys. Okay. All right, so we're settling down here a little bit on oil. Light sweet is now up about 11.5%. This is a 4-hour chart. These will all be 4-hour charts. We have a pullback in the making and no shock here because we are trading above the third standard deviation Bollinger Band. We're not supposed to be there. I would expect a pullback, probably a retest of what will be a soon rising 20-period moving average, and then we're going to proceed higher into the morning. Now, I want to take a look at how the stock market futures are behaving. They're down. They were down lower. If they do open up lower tomorrow morning, I don't believe this to be a sell the news event. I think that we will recover. I think that there's a good possibility that we open up tomorrow morning down, yet we close the session of trade out higher on the day. Why? It's because A, the bombings didn't happen on U.S. soil, and B, you have the Federal Reserve meeting, and if he yeah, right. Kurt, you're so right. The shorts are getting killed right now. The Federal Reserve is set to announce a rate cut, probably going to get a quarter point. If they go for a half-point cut, you're going to see the markets just rip higher. And you can see that we're seeing the S&P futures rally back right now. This is a 5-minute chart. We're very oversold. Let's watch for a rally back. Let's see whether or not we take out the session lows, because that'll be a tell. If we roll over now after a brief rally and take out the sessions low, that'll be a problem for tomorrow morning. But net, I think that we are going to proceed higher. Due to the 2020 elections, President Trump is not going to allow this market to drop. He's going to jawbone the big banks to buy back stock and buy other stocks as well. So I'm not too fearful about the weakness in the markets right now, the stock market anyway. Now, as for the US dollar, the dollar no shock is moving higher on the session. We'll go back to a 4-hour chart. All right, so a big inside bar here, meaning we have not proceeded to a new weekly low, which is very good, and we haven't taken out the highs of the prior bar, but there's a good possibility that's going to happen because right now you're seeing a safe haven play, money rotating out of stocks into the US dollar. I'm going to assume gold. Yeah, you have gold back above 1,500 the ounce. We were higher. We're pulling back now. The question then becomes, do we hold support? Do we hold 1,500 on gold into the open tomorrow? If we do, that's a psychological support level. In all probability, we're going to move higher. Yeah, tell him. I bet you're happy you sold the DGAZ. Yeah. As for, I sold the UGAZ the other day. I'm going to regret that now. Well, they're not open yet. Let's bring up Nat Gas right now. Yeah, natural gas spiking. So a decent move higher here, over 2.33% on Nat Gas. So a big move here, a big move. Let's take a look at cryptocurrencies. We'll take a look at Bitcoin, see how it's reacting. Bitcoin's looking really good. It's breaking out. We had a bull flag set up here. It looks as though we have money rotating into crypto. We've been in the trading range on Bitcoin. We have the upper band here, lower band here. We have RSI putting in higher lows. And I think that we're going to see continued strength into the morning on Bitcoin. Audio is good, good. Okay, cool. All right. Let's bring up the Nasdaq Futures. We're down about 0.75% at the open. 5 minute, wow, 5 minute bar. We had that rally back attempt earlier, and now we're rolling that. We're taking out the lows of that prior bar. Now, I'm not a day trader. This is very volatile, 5 minute chart. Let's go back to the S&P, see whether or not they're selling strength. Yeah, they are. They're selling strength. All right, so right now, we need to see this support level hold. That's at 29.87. If that fails, this is going to become a fairly rough night for longs. If it holds, we'll probably see a rally back, but I'm not going to worry too much about the stock market right now. SOXS, the semis. Yeah, I would keep in mind, Tom, about the SOXS and the semiconductors. They broke out last week. So on a weekly basis, I would be more concerned with a retest of that breakout point on a weekly basis. Right, so we had SMH move higher last week. So while I agree that you're probably right, you're going to get a pullback tomorrow morning. If you already have well, you probably don't have a profit. It depends upon when you open it up. If you have a profit in that position, you may want to look to scalp it and just take it off, because I'm expecting that they'll probably buy this rally, because you have to think about what the president is doing right now. He's getting all the narratives set up for tomorrow morning, that if we get a real pullback in the market, what he's going to do is he's going to have positive trade talks with China come out, whatever the narrative is going to be, to put a bid under the market. So to fight against the president and him having this market rally to new all-time highs, I would be a little bit concerned about doing that. So I would take the advantage on any pullback and probably look to cover some of those shorts. Now, Yeah, I think Nuggets gonna do well tomorrow, Tom. USLV as well. We both got involved with that, adding more to NUGT. It was very, very oversold. I mean, if you take a look, I put this on the week ahead commentary, where we came very close to retracing down to 27.60 per share. Actually, 28 is a better support level to use. We broke right through the 50% retracement levels for those of you that use the Fibonacci's. So Nugget is due for a pop here. I mean, if you take a look at, and I mentioned this on the week ahead commentary yesterday with members, is that the stochastics are extremely oversold. They're at 3.17 on the Stokes, and I'm expecting that we will get a pop higher tomorrow. Now, the strategy that I would look to employ is I would probably on that rally, I want to stay long, but I'm probably going to look to sell some covered calls to hedge the position because I'm not going to be the least bit surprised to see a pullback and a retest of recent support and then allowing NUGT, gold, et cetera, to rally. Right now, you're seeing money rotate into gold, and that's fine. We may open up very, very strong tomorrow morning, but I would expect in the coming days to get a pullback, especially if Fed Chair Powell decides no rate cut. You're going to see gold drop like a rock, but you're also going to see the stock market drop like a rock as well. So let's take a quick look back at the futures. All right, so you're seeing buyers moving now. All right, so we're seeing some good buying this bar, this 5-minute bar. Until we take out the session highs, I'm not going to get excited about it. The dollar still strong. As for light sweet crude, all right, so here's the pullback. We expected this, right? So here's that bearish reversal bar. And this is why we never want to get too excited about chasing anything. So those who bought with a market order to buy, get long of oil, they're right now, they're getting a beating. So I expect it will probably pull back to this rising lower band of now support. It was resistance, and to the 20-period moving average. Those lack support levels. But assuming it takes a couple of weeks to get oil back online, I think that we're going to see a bid under oil for quite some time. And even if those facilities are back up and running by the end of the week, which is improbable, you're still going to have that risk premium built into oil. So if you're long of oil and the energy stocks, I would stay long right now. I think that longer term they're going to go higher. Any Yeah, well, Kurt, that's a good point. Nugget was a bull trap on Friday, and that's a great point. Let's take a look at this. And this is why I try never to buy at the market open. Members can attest to this. I rarely buy at the open. I will sell at the open if I'm getting a good price, but I rarely buy at the open because what they do, especially if you have a stock or in this case an ETF that's breaking down, they did it every single day last week. They rallied it, then they sold it off. So you're right. It was a bull trap. Again, on the 9th, they rallied it, they sold it off all day last week. So I think that if it were not for this event over in Saudi Arabia, that we probably would have seen another pullback on NUGT tomorrow, and for all I know, it could still happen. I mean, we have several hours before the 9:30 Eastern Standard Time bell opens up. But if we do pull back on gold overnight, you can expect that we're going to retest this lower band of support here at the 29.17 level, and we'll look to see whether or not that holds. But we did some buying on Friday. But if we do rally tomorrow morning, I'm going to look to sell some covered calls on some of our NUGT position and just hedge that position, because I don't think we're going to get a straight shoot up higher. I think that we may rally, and if we hold the gains of the day, we'll break out above this upper band of resistance, and then we'll pull back, do a retest, and hopefully the options have expired worthless, or we could just roll out to a future expiration date and just stay long with the shares. But I doubt I'll have them called away from me. I'll probably look to sell. It depends on where it opens, probably the 38 to 40 strike price going out on a weekly basis, at most 2 weeks, and hopefully those shares won't be called away from us. Metham, yeah, I could go over T. Yeah. Colton, hey, how you doing, man? Yeah, I can go over those symbols. Let's do it. Let's bring up T first. Whoa. All right, so we have kind of an issue here. I mean, it's a beautiful chart, right? They pay a big fat dividend, and I think that they're in play right now, if memory serves me. I don't have the news in front of me, but I believe that they are in play. So we closed out the week last week. Let me make sure. Let's edit these Bollingers. These are a 2 standard deviation Bollinger Band. We closed out the week last week above the 2 standard deviation Bollinger Band. So we're a bit extended here. That doesn't mean we can't press higher, but I will point out that we did see some sellers move in and take T off the highs of the week. Volume was very good. Daily chart. We had a bearish reversal bar on Friday. So this is one heck of a move higher here. I wouldn't be a buyer here. I think it's a great chart. I think that it's got some good. This is even too parabolic of a move to use a reasonable trend line. All right, so I would look for support at this level here. Let's call it 37.45. This is a big move higher. I question whether or not that support level is going to hold. So let's bring up some daily trend lines. Yeah, you could see that we shot right up and through this prior lower band of support, which is now acting as an upper band of resistance. So I would be careful here if it's going to be a short-term pullback to this lower band of support, for a more serious pullback to the support level here in green at around 36.60 per share. TMUS. T-Mobile. What's with you guys tonight? All right. All right. So the trend is still higher. I don't like this outside reversal bar. I don't know what caused that. Maybe it's a news event. I'm not quite sure. Do you know what that event was? All right. So I would be careful here with T-Mobile because we have found some support. If you're long, I would stay long. If we get a new weekly high, if you wanted to add to your position, that's fine. But if we break this 20 period moving average here, I would be a little bit cautious. I would lighten up on my position. Now, this event here is a bit of a concern. I have to say that outside reversal bar scares the heck out of me. The fact that we didn't get a continuation breakdown is a positive, right? So the longer that we do not break this support level, we consolidate, the less relevant that bar becomes. So I would not be an aggressive long here. I wouldn't sell my position. And if we do at some point in time, and when we do at some point in time, clear this upper band of resistance up here at 84.95, well then I would add to the position. Now, arguably, if there's no news event that could have spurred this sell-off, it's all technicals because the prior week we shot right up and through the 2 standard deviation Bollinger Band and probably the 3 standard deviation Bollinger Band as well, and that was just a technical sell signal. Hi, BA. Welcome aboard. Kurt, any thoughts on IWM and correlated TZA? Yeah, IWM had a good week last week. So the issue with IWM is that uh, we have not broken out yet, as have the S&P 500 and the Nasdaq, right? I think that they will. I think that they are going to break out. I was looking at the TZA on Friday, and I saw that there was a bid being put under it. And those that bought the TZA on Friday and they sell tomorrow into the open, assuming that we're weak on the open, they'll probably do well with selling that position because I do believe that they are going to do everything in their power to press these markets higher. It's all about the 2020 election, folks. It has everything to do with it. It's the power that these people have, and they do not want to let it go. It cannot be overemphasized. So the media will play along. Fed Chair Powell now has his excuse to cut rates, so he has a safe phasing, face-saving reason to cut rates. So what I would look to do here is I would look to buy on a pullback the IWM tomorrow, or in my case, I like volatility. If you don't like the volatility, I would buy the pullback on the IWM. But I like the TNA. So same thing, same price correlation as with the IWM. Same price channel here. I would look to buy the TNA opening position on a pullback because I could be wrong. I want to keep that opening position small because I could be wrong. We may not get that bounce back, right? So I don't want to get overly long on a panic sell-off tomorrow morning if that's what we get. What I want to do, I want to get more aggressive to the long side on a breakout and a close above this upper band of resistance. So I want to buy the strength. I want the markets to tell me, okay, this Saudi Arabia panic was nothing. And they shrug it off. They send the shares higher. We get a breakout. Then I want to be long of the TNA or IWM, whatever you prefer. I would avoid the TZA right now unless you're using it for a trade, if that makes sense. Does that answer your question? Tom, that gas play I nibbled on last week as a long-term play is TGS. TGS, let's bring it up. All right, so weekly view. We closed out the week with a bearish reversal bar on TGS. So the path of least resistance remains to the downside. So as a trade, I know you're saying if JP Morgan's involved and they're buying up the shares, um, that's great. It's great to have a big whale on your side. But we're not at, let's bring up monthly support. Yeah, same deal here. We have support. I would look to buy down here at the 6.81 level. And if that fails, I would look to buy at the 6.17 level and look to get long at that level. Now, we'll probably get a pop higher tomorrow morning in the shares. So I wouldn't go chasing the shares right now. There's plenty of natural gas out there. We're the biggest producer of it, and we're the biggest producer of oil now. And Saudi Arabia is actually the third in terms of production. So I think that if you went into the weekend long of UGAZ, tomorrow is going to be a great opportunity to sell. If you went into the week long tomorrow, long of TGS, it'd be a great opportunity to book some profits on that trade because ideally what you get is a pullback and a retest of support. Now you could argue that we pulled back, we tapped support back on, I should say, during the week of August the 12th, and we rallied. We're now pulling back. Maybe we do have a setup here for a longer term play. So what I would do is this, is I would take my crayon out. If you have Trend Spider, take your crayon out and do this. Screw that up. So what I would do here, I'm going to keep all of these active. So now we have our alerts set. So what I would do here, if you're looking to get long and you don't want to chase the rally tomorrow, I would wait for, if we do break out, we'll get the breakout. But as the emotions subside, right, they will subside. Saudi Arabia, nobody's going to be talking about it next week. The bid will come out from these shares and you'll get a pullback, right? Watch for a pullback of this support level. And if you get that pullback and it holds that support level, that's your buy signal, right? So that's how I would play this. Either a pullback to one of these two support levels or both, or B, I would look for a breakout and above this upper band of resistance, which may happen tomorrow morning. But if we do get that breakout, watch for the pullback and the retest. That's your go signal. And if the shares fail to hold this support level, that breakout point, that's where you're going to need to keep your stop loss order to get out of that position with a small loss, if that makes sense. You're welcome, CB. Who had PH? I've been meaning to go over Parker Hannifin for several days now. I said I was going to do it the other day. I forgot all about it, and I apologize. I'm going to go over Parker Hannifin right now because I happen to love the setup. Let's clean this up here a bit. All right, let's take these off. Now, when I was looking at Parker Hannifin the other day, I took a look at the weekly charts, then the daily charts, and then I took a look at the monthly chart. And that really got me excited. So let's bring up a monthly chart. And you can see kind of what I'm talking about here. We are very close to a major, major breakout on Parker Hannifin. So while I am very bullish on this setup, I can't say go buy it tomorrow. We'll check out the daily chart. Maybe you can. But we're so close to the upper band of resistance here that I would be concerned about a rejection, right? And us getting thrown back against this rising lower band of support. Now, what I would do in this situation is do two things, two alerts. One, I want to know right away. All right, so this will tell me when we touch it and when we get the breakout, right? This alert here will let me know if we get a rejection off of that monthly support level. All right, so my alerts are set. That's how I would play this. I would watch for the breakout on a monthly basis. I mean, this is a beautiful consolidation. I mean, we had a great uptrend. We settled back into an orderly consolidation. Let's take a look at the daily chart. Yeah, you can't buy these shares right now because we're being rejected at that monthly support level. So those alerts that we just put on the monthly chart, they carried over onto the daily chart. That's the beauty of TrendSpider. This is why I like this program, multi-time frame analysis. And you could even do this. I could throw up, you see, those are the monthly resistance levels, right? So I would not be a buyer of the shares now, although I'm very bullish, because your risk versus reward is not on your side right now. Too many people are betting against the closure of these shares above this resistance level. So I would wait for a pullback, maybe down to 176, around there. You have support at that level. If you wanted to nibble, you wanted to scratch the edge. Are you long of these shares right now? This is a 4-hour chart I'm throwing up here. Yeah. So we're seeing the same on a 4-hour chart that we're seeing on the daily chart. So I would just bide your time right now. Allow the shares to come to you. Either A, you get the breakout, or B, you get a pullback. One of the two. Any other symbols out there? Let me make sure I didn't miss anybody. T, we did. So what I'll ask, if anybody has these symbols, you could put them in the the chat box. I'll be more than happy to do them for you. But what I would also ask is that even if, you know, for especially for members as well, if we're in the forum, or if you want to send me an email, what would you like to see on these live streams? What went well? What didn't go well? What could I have done better? I love the constructive feedback. You're not going to hurt my feelings. I want to do these so I'm more engaged with you folks. So if I'm talking too fast, whatever, please let me know, and I will definitely work on it to make sure that these experiences are better. Now, for members, what I'm thinking about, and I'd love to know the feedback on this, is if we did a live uh, YouTube Live. It would be unlisted. It would really be for only members only on Wednesday nights, where what I would do is we'll just do a midweek update. Where do we stand midweek? It's hump day, and we'll discuss uh, how we performed so far during the week. What adjustments do we need to make to our portfolio? What looks good? What's not looking good? And that's basically just a pulse check of the market midweek. And then, of course, we'll continue to do the uh, week ahead commentary, which comes out on Saturdays. That should already have been sent out to you. Okay, so Tom wanted MAXR. And if you want these videos in the future, folks, please click the like button and then hit the bell, that subscribe or the notify button, and you'll be alerted when I start a new live stream. Because as I become more comfortable with them, I'm probably going to do them more frequently and probably like impromptu right away. And hopefully I get to that level. CB, great feedback. Thank you. Good stuff. All right, Maxar. Tom, I'm going to do the analysis on Maxar. Do you have the reason why these shares tanked like this? Was it an earnings report or something else that went on? It just helps me in my mind uh, rationalize what's going on with the chart. So on a monthly basis, we have seen obviously a major free fall. Another looning play? What is looning play? So what I would be concerned about here are these topping tails. Major oversold play. Okay, gotcha. Yep, gotcha. So we have topping action. We've had a nice dead cat bounce off of the lows of January. What we've really lacked is a nice orderly pullback. On these shares. So while we've had a good month so far, I'm concerned about the topping action. I'd like to see a rally up and through 9.81 on a closing basis, and especially above the July highs, which was at 10.05. Let's drill down to a weekly view. On a weekly view, a little bit more interesting. I mean, we have some consolidation here at this rising lower band of support. We have a trading channel that's formed. I would want to see a close above the July highs before I got involved with it to the long side. And I would not short these shares. I mean, they've had a nice consolidation here. Let's go to a daily chart. All right, so we're overbought here on a daily basis. We had a bearish reversal bar on Friday, and I would be looking for a pullback probably down to that 8.16 number, and that would be a good risk reward entry point if you're looking to get long of the shares on a pullback. I definitely wouldn't buy them tomorrow morning. And the catalyst for tomorrow could be the sell-off in the S&P futures or the micro caps as well. So I would expect a pullback on these shares, and I would look to get long at around the 8.16 level, because that was resistance back here in August and resistance back here in July as well. So it looks like a good risk reward entry point with the stop right below it. Yeah, the oversold scalp trade, but you don't mean now, right? It was at one point in time, right? Yeah, definitely not a longer term. All right, I got you. I got you. So you're looking to scalp this, but RSI, you're looking to short this, Tom? Because I'm not seeing the catalyst uh, to the short side. So I'm kind of confused about what your play is here. Kurt, I'm going to get to your symbol too. VPOC. Oh, you already did this. Okay. Yeah. I see what you did. So you bought the breakout. Okay. All right. Good. I'm glad you didn't say short. Uh, so if you're looking to go long here, Tom, I would wait for that pullback. Definitely wait for the pullback because you got a rejection on Friday. You're probably going to get a pullback down to the 8.16 level right here. That's your buy point. That's where if we bounce off of that support level, I would look to nibble at that price point and get long at that point in time. The next chart up, Kurt, VPOC, VPOC. Oh, congratulations. Good for you. Aces. VPOC is not good. Oh, yeah. All right. So, all right. I know what you're talking about. You're talking about the VWAP. So, Kurt, you were interested in IWM before or TZL. Bring up the TZA. So, with TrendSpider, they have a feature, raindrop charting. And let's take RSI off. And I'm going to bring up two charts. All right, so above here are the VWAPs. Now, this is volume weighted moving average. So and Kurt, is this what you meant? Hopefully. All right, so you're looking for how to use the volume weighted moving average. This is one way I can help you to learn how to use volume weighted moving average. It's a mixture of raindrop charting is a mixture of volume weighted moving average, which is what you're referring to, but it's also candlesticks. So basically the way you need to look at it is that The left side of the candlestick is the AM price action, the morning price action. The VPOC. I'm not sure. I have to look that up, Kurt. Let me see. I'm not seeing that here. That's not something I'm really familiar with, Kurt. Sorry about that. Folks, let's take a quick look at where we're at in the futures market. Okay, light sweet crude is holding support. Let's take a look at this from a higher level view. Yeah, Carter, I get your point, and maybe stockcharts.com has that, but TrendSpider, they have the same what you're looking for, but they use it in raindrop charting. It's really interesting. One day I'll probably spend a few minutes just talking about raindrop charting, and I'll look into the VPOC for you. I wrote it down. I have a note for it. Let's take a look at oil, where we are on a historic basis, on a weekly basis, and let's get rid of all these trend lines. All right, so we're trading at highs last seen back in May. Resistance is going to be right here. So if we wake up tomorrow morning and we have oil above this resistance level, that's going to be an incredible price move. So right now we're up 11.58% in the futures on oil. Now gold, I have to take a look at because I have a major league position in the gold miners. All right, so gold is up 10 spot 10. No weekly high yet. And we are off the highs of the session. Obviously, let's go to a 4-hour chart. Yeah. And then Kurt, you have me curious now. So I'm going to look into it. I'm curious about it. The indices are clawing back. Yep. We'll go to Nasdaq and S&Ps before we shut down tonight. Can you recommend a position to buy? Can you please also add a weighted so that we know how much to put dollars in that position? Positions to buy tomorrow. It depends upon your risk tolerance, right? So you, if you're, let's use a hypothetical. I'm answering BA's question here. In that, if you're risk adverse, I'm not risk adverse. I like risk. I like volatility. It's my job. I need volatility. So I can tolerate. You need to be able to sleep at night. So if I were going into the week and I'm looking to buy something, which I am, I'm looking to buy the small caps. I want to buy on a pullback because I think they're lagging and that they're probably going to break out. Now, I probably won't allocate, especially using a leveraged ETF, more than 15 to 20% of that to my portfolio, and 20% is high, right? So if I were risk adverse, I would keep that at 5% to no more than 10% of your overall position if you're using a leveraged ETF. Now, if you're using the IWM, which is far less volatile, and you could sleep at night, then you could probably increase that up to 15, 20% of your portfolio because you have less volatility. You need to be able to sleep at night, if that makes sense. So it all comes down to your risk tolerances. And sometimes you'll enter a trade gung ho, and then all of a sudden it goes against you, and all of a sudden, you know what? You're saying maybe I shouldn't have been as aggressive. You go into a trade bullish and very brave, and all of a sudden you're kicking yourself that you're a little bit too overly aggressive going into the position. So sometimes we can talk ourselves into thinking that we're going to be right on a trade, and you really need to be very, very careful with doing that. Let's move on with the Nasdaq Futures. Yeah, they have clawed back here. 4-hour basis. We're off the lows of the session, pulling back. So the question is, do we roll over and take out the session lows? Kirk like the captain. What are you? Stupid? Is a ram behind? I'm not sure what that's coming from. All right. If crude continues up, this is bad for the markets, but will Powell notice? Yeah, Powell's going to notice, Tom, because he doesn't want to cut rates. The guy does not want to cut rates. He was hired by Trump to be an independent guy and to get the economy, get our interest rates normalized. He's not like Bernanke. He's not like Yellen in that they were puppets. They were stooges. And the president has had to come out time and time again and jawbone Powell down. Now, he doesn't want to make the move on cutting rates. It's still a question about whether or not he's going to cut them this week or not. The market's got it all priced in that he's going to cut rates. If he doesn't, you're going to see the markets tank. What this is going to do, in my opinion, I think that the attack in the Persian Gulf on the Saudi facilities, it's going to provide him cover to cut rates. And the only thing that could throw that off course is that right now we have inflation running at over 2%, right? And at last read it was at 2.4%. So the trend is up on not just the core, not just CPI, but on core CPI. So what the markets may become concerned about is that, okay, with oil rising and we're already above 2.4% on inflation. Well, if oil continues higher, and he uses that as an excuse to say, you know what, inflation is moving higher now, I'm really concerned about cutting rates. He could also take that path, and that would spook the markets. But I think that given the jawboning by the president, given the 2020 elections, I think he's going to use it as an excuse to cut rates. I really do. So the Nasdaq is off the highs of the session. Looks like we're consolidating here. We have a long way to go before the 9:30 session opens here in the United States. The dollar pulling back. The S&Ps, very similar to the Nasdaq. Platinum ripping, ripping. Let's take a look at yields because the bond market has been getting hammered of late. I want to take a look at the 10-year. Heck, we'll go with the 30-year. Here it is. Wow. A lot of money floating into bonds. So they were oversold. You're going to see yields pull back tomorrow. That's going to be bullish for gold. Tom, you're right about saving the frackers, no doubt about it. Remember on the weekend commentary, if you watched it, I mentioned that you saw a bearish reversal bar on the tips last week. And if they go, that's a major problem. So the I'm sorry, not the tips, on the junk bond fund, not the tips. I misspoke there. That's the problem with being live. You can't edit out your mistakes. So we saw a reversal in the junk bond market last week. If this event didn't occur over the weekend, we probably would have seen a continuation pullback on the junk bond market, and that would signal problems for the frackers. So yeah, this is going to help the frackers, no doubt about it, in the short term anyway. So bond money, you're seeing money rotate into the bond market. That's the 10-year. We'll take a quick look at the 30-year. Same deal here. Kurt, you bought a bear spread on the VIX. Yeah, well, you know what? All right, so uh, yeah, okay, it's probably going to be a volatile day for you. However, you didn't go net short the VIX. That's you need to pat yourself on the back for having a hedge, right? So you put a spread on. I'm assuming that you have a long side. You sold some books VIX calls as well, right? So you're hedged on the position, right? So don't kill yourself over it. No, and I misspoke before. You sold, you bought the puts on the VIX. You sold out of the money, put options to offset it. Yeah, okay. And you have until October. Listen, you're hedged on it. Don't beat yourself up on it. That's our business. At least you were hedged on it. That's the most important thing. So bonds look like they're getting stronger here. If nobody else has any, yeah, if anybody else has any symbols they want me to review, I'm probably going to wind it down. We've been going on for a while now. And if you have any feedback, I would really appreciate it. Don't forget to hit that subscribe button. Leave a comment if you can. When I don't know how you do that on a live stream. I'm still learning this. I guess when I post the video, you can leave a comment. But give a like to the channel. Click the notify bell button. All right, 2 contracts. All right, so it's not a huge position. All right. All right. I feel your pain. I've been there before. So give yourself a break. Don't beat yourself up about it. And don't forget, the VIX is against the S&P 500. So you may just see the futures reversed by the end of day tomorrow. I think the key for you on this one, Kurt, is just don't go reacting. If we open up down tomorrow morning, don't close out for a loss immediately. This is your call, but don't close out for a loss on the panic if we do get a big sell-off. Wait for a rally back, and we may get a rally back into the Fed meeting. Remember, this is going to become old news fairly quick for the stock market, not the commodities market. The commodities market, they're going to remember this event that occurred over the weekend. The stock market, not so much. So don't kill yourself over this. My pleasure, Tom. And with that, I'm going to shut things down, folks. I really want to say thank you very much for joining me tonight. I had a great time, and I'm looking forward to doing this again. So thank you, and I hope to talk to you again soon. Everybody have a great night and a profitable trading week. Be well.